Welcome back to The Deep Dive, where we unpack the stories behind the headlines. Today, we're looking at something pretty striking with XRP.
Yeah, that TradingView news article you flagged. It really jumps out. The headline alone, 90% drop in XRP payment volume. That's not just noise.
It definitely made me pause. Is this just market fluctuation, or does it speak to something deeper, something more structural?
Exactly. Our goal today is to dig into what that 90% drop actually means. What might have caused it, and what are the broader implications for XRP's future?
So let's start right there. The article specifies it's a 90% decline in account-to-account XRP payment volume. That's a big deal.
It really is. Because account-to-account volume goes straight to the heart of XRP's use case, efficient peer-to-peer value transfer.
And that's supposed to be its bread and butter. A direct measure of people actually using XRP for real payments, not just trading.
Exactly. So, if that metric is down 90%, that's not just a small dip. That's a dramatic fall-off in core network activity.
It suggests a real slowdown in practical utility, doesn't it? Less usage, fewer transactions. That's a worrying signal.
And in crypto, usage equals strength. Network effects are everything. If usage tanks, long-term value can erode quickly.
The article connects this usage drop with price action, too. It notes XRP briefly popped above $2, then slid back near $1.17.
Yeah, and it mentions XRP struggling to break out of a downward channel that's been in place since late 2024.
So you've got slumping usage on one hand, and on the other, a price that can't seem to rally sustainably. That feels connected.
It definitely points to a gap between speculative price moves and fundamental network health.
Like, sure, maybe broader market hype pushed the price up, but without real usage, the rally couldn't hold.
Exactly. The sellers stepped in fast. The market's basically saying, "Nice price bump, but where's the substance?"
The article also highlights resistance around $2.20, $2.30, and mentions the 200-day moving average being tested.
For traders, those are big levels. Failing at resistance and seeing usage collapse. That weakens any bullish case.
It makes that resistance zone even more of a psychological barrier. No follow-through, no conviction.
And the 200-day moving average is often seen as a line between bullish and bearish territory. If XRP stays below that,
then it may indicate institutions or long-term holders are losing confidence in the project.
The article even says historically, when payment volume drops this much, price tends to follow, especially with weak technicals.
So what's the mechanism? Why does usage falling off a cliff hurt price so directly?
Fundamentally, fewer people using XRP for payments means there's less need to hold it. That reduces demand.
And lower demand often leads to lower prices. Plus, if investors see that fall off, confidence takes a hit.
Exactly. No one wants to throw capital into something that's losing its user base. It's a feedback loop.
So the decline in utility isn't just a symptom. It could actively fuel further price weakness.
That's the vicious cycle the article points to. Lower use, lower price, less confidence. Rinse and repeat.
But the article does end with a sliver of hope. It talks about historical support near $1.80. Could that provide a base?
Maybe. If enough buyers step in there, it might stabilize short term. But is that really enough?
Good question. A bounce off $1.80 could happen. But unless network usage rebounds too, it's just a temporary fix.
Exactly. For a real turnaround, you need more than a price floor. You need renewed belief in the utility.
The article lists the hurdles: breaking $2.20, exiting the downward channel, and doing so with strong fundamentals.
Because if you don't have a real pickup in usage and volume behind a breakout, it's just noise. It won't last.
That kind of breakout has to come with conviction, broad participation, and on-chain support.
Otherwise, it's like building on sand. Without that foundation, any rally is fragile.
So, stepping back, it really feels like XRP is at a crossroads, a critical point.
Totally. If buyer momentum doesn't return, both on the charts and on the network, it could face deeper declines.
To wrap this up, the 90% drop in payment volume is a red flag. not just for price, but for the entire use case narrative.
And the article makes the case that unless we see a turnaround in both fundamentals and market structure, XRP's in a tough spot.
Which raises the final question, what would it take to actually reverse that 90% drop? What would need to change?
That's the million-dollar question. Whether it's new partnerships, ecosystem innovation, or broader adoption, we'll have to wait and see.
Thanks for joining us on this deep dive. Until next time, keep your eyes on the data, not just the ticker.
Absolutely. See you on the next